All right, good morning and welcome, traders. Let's get into the Wednesday, 9/20/2023 daily trade wrap up and the market review. Let's take a quick look at the markets. So we had the FOMC meeting yesterday. The Fed left rates unchanged as expected, but in the post-conference, Chairman Powell was pretty hawkish on his tones. Looks like they're not going to be reducing rates anytime soon, and they're still holding out, potentially holding or raising rates in the next session or two. So I think markets did not like the hawkish tone, sold off later in the session after an initial bump. Usually the first move on the day is absolutely the wrong move. So if you've been playing that for a year or two now, you simply take the opposite of the initial move and you've made some money. All right, so let's take a look at what happened in SPY on the session yesterday. Pretty good sized down day in the markets. You can see here on the daily chart on the right, our head and shoulders pattern continues to take shape. So you've got definitely the left shoulder, the head, and now the right shoulder is pretty well complete. And with the markets looking to open up lower today, on Thursday, at least 3 points or 30 points lower on SPX, 3 points on SPY. That's going to pretty come close to getting us close to this neckline in here. So any break of this area in here will be a lot more concerning. You've got a little bit of a gap down here at the 422 level. So first order of business here we'll probably break through the lower Bollinger Band today on Thursday. We'll head down to the 3 ATR around 432, which is also where we have a previous pivot level right around 431 and a half. We'll keep an eye on that level. Do we seem to bounce or hold into that level, or are we going to continue to break down and maybe head towards filling this gap, which would definitely trigger this head and shoulders pattern? If that doesn't hold, we'll be looking for the 21 or the 200-day moving average around 418 as the next stop. If we're looking at the weekly as well, we're going to not only just target that 423 area that we just talked about, we'll look at the bottom of the Bollinger Bands down here around 412 as the next line of defense. So looking at MACD and RSI, both heading lower on the weekly, both heading lower on the daily, not oversold. So there's more downside to come in the market. If we look at the tech stocks on the Qs, pretty much the exact same scenario here. You've got a head and shoulders pattern forming. This right shoulder is already broken supports in here. It's broken the 21 and the 50 EMAs. So we are headed lower on the markets. MACD and RSI, weekly and daily, both headed the same direction, pretty bearish and negative there. And then if we take a look at the IWM, the Russell, you're going to come pretty close to this little support area that we have in here, sitting around 180. And I'll extend this out a little bit more. We broke through that yesterday. We'll definitely break through that on Thursday, as we're probably going to drop another point or so or two on IWM. Weekly, MACD and RSI falling. Daily, MACD and RSI falling. We are not oversold on any of those indexes. We take a quick look at the VIX. Got a nice pop-up yesterday. It's going to pop up more here on Thursday, up around the 16 level. So getting some volatility back in the market as the markets drop. And unfortunately, with the Fed hawkishness, the dollar got a little bit of a bid yesterday, and the US dollar rallied off of its lows late in the session. It closed near its highs. And then here on Thursday, we're expecting this dollar to go significantly higher. So strong US dollar. Weekly RSI and MACD continue to climb. The daily MACD is still kind of just flat, but maybe a little bit positive, with RSI back into overbought territory. So I think the dollar remains overbought, but it can stay there for a period of time. So we'll keep an eye on that. I think it's getting a bit tired, but with the latest news from the Fed, it could have a little bit more to go. And then if we take a look at bonds on the session, bonds dropped on the day a tad. They tried to make a little bit of a jump. We're going to be going lower today. We are going to break through this previous low area, or pretty doggone close to it. The previous low back here, the week of October of 2024. That week, October 24th, low was 91.85. We are going to probably open below that. So TLT headed lower for everybody that's thinking that they should be all over TLT and TMF, because the markets only have one way to go, and that's going to be up, or I should say rates are going to keep going lower. That's not the case. The Fed is not going to stop their hawkishness right now. So another rate hike potentially coming, and they're not going to reverse anytime soon. CPI, PPI came out hot a week ago, and the Fed paying pretty close attention to where things are going. So if you thought TMF was the greatest thing, that greatest trade of your lifetime here, so far it's been nothing but a dog. And if you've gotten into it where a lot of the furus tell you to get in, and you were getting in around 6, you're down to around 5 now. So you've lost probably 16% already, because you're trying to time the bottom here. And I think there's more downside to come in bonds. So I don't think that getting long bonds here is the right move yet. I think it'll come a time where that'll be a good trade in 2024, but I think there could be more downside to bonds, so I'd be pretty careful with that. That being said, Forex down pretty decent yesterday and today after the Fed chair was talking. So with the dollar rise, you're going to see the Aussie dollar, the British pound, the Canadian dollar, the euro, all heading significantly lower in the trading sessions. Not great for strangles out there. And oil continues to just chill out a bit, which is perfect. So we've seen oil coming down the last 3 sessions, taking a break. Great for our strangles on oil. But still, it's near its highs, which is a pretty good inflationary piece. And then if we take a look at gold, gold's heading lower on the same news as well. On the weekly, MACD, RSI negative, and on the daily, you're going to have a pretty good drop in gold on Thursday here. RSI continuing to fall pretty decently. So a lot of weakness in everything out there. All right, S&P sectors, obviously XLK, as you would expect yesterday, taking a pretty good hit, but we already had indicated that these were pretty weak anyway. So tech stocks have been just trending down. MACD and RSI daily and weekly, pretty much mirroring each other. There was no reason to get long tech anyway. And if you were short, as we were on a QQQ trade, that was pretty beneficial. XLY also heading lower daily and weekly on all technicals. The XLC heading lower on daily and weekly on all technicals. The XLE, so even defensive and energy area, has been heading lower and had rolled over on the weekly. So weekly MACD and RSI heading lower, daily MACD and RSI heading lower, again, negative and bearish there. If you take a look at the XLF, which had done a pretty good job recovering, just kind of meandering around on the weekly here. So still holding up okay on financials. On the daily, pretty good down day yesterday, and MACD rolling over with RSI dropping. So a little bit of a pullback right now. So we'll see how those sectors bear out. Not going to really jump into too many stocks because they all look pretty much the same. Amazon breaking down to the 50 EMA here on the daily, and should have a pretty decent drop day to the bottom of the Bollinger Band today. So weekly MACD and RSI lower, daily MACD and RSI lower. It's a broken record on most all of these stocks. Apple, same exact scenario, except the daily here, the MACD has been trying to get a little bit of a recovery. Yesterday stymied that, and it'll drop a little bit today, but Apple holding up decently. Microsoft dropping weekly and daily MACD and RSI, as well as the charts. Meta hanging in there on the weekly pretty well. So Meta's doing pretty good. Here, the daily's been rolling over You're getting some weakness on MACD and RSI on the daily, but the weekly is really holding tight. We'll see how Meta makes out. And then Google, a little bit weaker on the weekly and pretty weak on the daily, with a big down day yesterday and more follow through expected today, heading towards that 50 EMA. So I think if you want to do anything, right now, I think credit spreads, call credit spreads are probably the way to go. Let's take a look at the account and see what happened yesterday on 9/20. We ended the day delta at 360.12, still within our 0.2% goals. So we're totally fine on delta. It moved up, obviously, with the markets moving lower on the session. I expect that it will move up a little bit more today on it. However, as the 112 trades start to mature out there, they start to become a little bit more delta negative. So that's also helpful to us. It gives us some automatic help on delta, but we'll keep some hedges on and make sure that our delta stays as neutral as we can. Theta stayed great, 1,092.36%, best theta we've had in a long time. So really good on delta, excellent on theta. Net lick barely moved at all yesterday. In fact, we were up decently almost the whole day. Whether the market was up or the market was down, we were doing pretty well. The very end of the session pushed us down just a few points, but net lick did not move at all. BP usage did move, so as the market dropped, span margin started to increase a bit. All of our ES trades, we're seeing some span margin increase, 224, which puts us at 73.13, of which 10% of that is in the T-bills BIL ETF. So we're really at 63. That is a little bit high for us. We'll keep an eye on BP usage. If we have to, we'll start to neutralize that a tad. But right now, with a sell-off, you can expect BP usage and span margin to increase a bit. We did manage $253 in realized gains on the day, taking us to $6,054 on the month for monthly realized. So we are over 2% return on the month already, and it's the 20th. So 10 days to go to get the last 1%. The net lick so far on the month up 89, almost $9,000 in net lick increase, over 3% on the month. Let's take a look at where we got our 253 yesterday in trading. That was on a call spread we did on the Qs. So we put this call spread back on 9/18, adhering to our call spread rules, taking a look at MACD and RSI, either overbought or oversold. So in this case, a little bit overdone and starting to reverse the other way. Well, we looked at the weekly, and then once the daily matched up with that and also started to head the same direction, that was our cue to get on QQQ and put on a short call spread here. We were in this trade only, we closed this thing out yesterday on 9/20, not sure why. So only 2 days in this trade to get our 50% winner. So we had a 2x loss, 50% profit target on, took us 2 days, got our 50% winner, 6.5% return on margin in 2 days, not too bad. So again, overall, looking pretty good for the month. Monthly realized $6,000. We're getting close to our $9,000 goal. We'll check back in with the markets. Expect a rocky road here on Thursday. We'll see if the markets can find any footing in the next day or two. And we'll talk to you guys later. Enjoy a great rest of your day. If you like this video, go ahead and click that like button. And if you're not a member already or subscriber here, subscribe to the channel and click on those notifications and get those alerts. We got some new stuff coming out on Tesla later today and some more market updates. So take care, everybody. Enjoy a safe day in trading. Take care.